With the market's almost singular focus on AI, it's missing that there are other opportunities with interesting long-term structural tailwinds priced at very attractive valuations. The opportunity in senior housing has been dubbed the silver tsunami by the industry executives, and the supply and demand dynamics in this market in the US are truly unprecedented. Let's take a step back and see how we've arrived at today's opportunity. As you age, senior housing is an alternative to living at home alone or with relatives. Given the $3,000 to $5,000 a month cost burden, the industry essentially caters to the more affluent portion of the wealthiest age cohort in America. So it's a great business to be in a recession, as demand remains steady and your major input costs are food and labor. This didn't go unnoticed after the GFC, and a wave of new senior housing supply emerged between 2015 and 2020. That led to overcapacity and drove down pricing and occupancy. So by the time COVID arrived, the industry was already in a bad shape, and the pandemic literally took it to the brink. A toxic combination of falling occupancy, rising interest rates, and rising labor costs saw a number of senior housing operators go bust. It didn't help that a lot of supply was private equity funded, and these funds are hitting end of fund lives now, meaning they have to sell their assets. So the flow of new capital into the industry remains very constrained. A big reason for this is that construction costs have risen 30 to 40%, and the rental increases have not kept pace. Adding new supply simply doesn't make financial sense. But at the same time, demand is rising rapidly. The first baby boomers are hitting 80 years old next year, marking the start of this multi-decade silver tsunami, when the 85-plus-year-old cohort will keep growing at 2 to 3 times faster than the general population. This could see the industry occupancy hit its functional cap of 97% in 2029. There simply may be no more empty beds left. We are capitalizing on this structural investment trend through Ventas, the second largest senior housing REIT in the US with a 5% share of beds. Ventas will benefit from the aging population and the ongoing shortage of senior housing. Their occupancy is expected to rise from today's 80% to more than 90% over the next 3 years. As utilization tightens, Ventas should maintain a steady 5 to 6% annual growth rate in pricing. We see free cash flow per share compounding at 13% through to 2027, and the stock priced at less than 19 times EV to next year's EBITDA, Ventas sits at 30% discount to its main listed peer. Ventas is a compelling pragmatic value opportunity.